What's up, everyone? Welcome in. Welcome, welcome. Welcome to day 2 of our 5-day trading challenge, my friends. Welcome in. Oh boy, oh boy. Everyone hear me okay? Give me a thumbs up if you can hear me. Thumbs up if you can hear me. Oh, beautiful. Beautiful. Well, welcome in, guys. As per usual, as the same as yesterday, we will give 3 minutes for people to roll in. So 6:03, we will hit the ground running. Excited to get started today. Strategy day. We're talking strategies. Oh boy, can't believe it. After all of just one day, getting to learn a little bit about the stock market. We're already teaching you strategies. It's going to be awesome. Really excited to get into today. So, as we are waiting for the next 2 minutes to have everyone roll in, today's question, if you want to participate in sharing, what is one hobby or skill that you wish you had more time to dedicate towards? I'll tell you, even me. So, I feel like I have a lot of free time. I get to do pretty much whatever I want to do. But for me, it's producing music. I play the piano. I've always loved music. I love all genres of music, and I've messed around a little bit with producing music, but I wish I had just full freedom each day to mess around with creating music. So, what is one thing you wish you had more time to dedicate towards? Pickleball, fishing and hunting, shooting, love all that. Jiu-jitsu, epic. A lot of golf, writing fiction, that's cool. Riding side by sides, riding horses, streaming games, pretty big nerd. Well, you're looking at a pretty big nerd too. Surfing all over the world, epic. Traveling, time with the sun, love that. Again, if you're just rolling in, what hobbies or skills do you wish you had more time to dedicate towards? For me, I wish I could spend more time producing music. I'm a huge music nerd. I love music. This is a safe place, right? Safe. This is a safe space. Everyone is wanting more out of life, so this is where you can verbalize. You can actually put it out into the ether, put it out into the universe. What it is that you wish you had more time to do. Traveling, fishing trips, ice fishing. My dogs love it. The fact that you guys are putting it into the chat and throwing it out there is one step closer to becoming a reality. Some people are literally scared to even vocalize or verbalize what it is they wish they had more time to do. Just to have freedom, have fun in my life. Amen to that. Amen to that. More time with the fam. Love it. Love it, love it, love it. Getting to golf. Love it. Great. Awesome, awesome, awesome. I want to make sure my kids don't have to work their lives away. Amen to that. Best believe my 7-year-old has already been day trading with me and figuring out charts, and she's actually helped me pick which way the stock's gonna go. It's pretty fun. It's pretty fun teaching the next generation for sure. It's a blast. All right, guys, it's 6:03. Let's go ahead and get started. Welcome to day 2 of our 5-day trading challenge. Today is strategy day. We are so excited. It's gonna be awesome. It's gonna be crazy. Few things before we get started, though. Number one, really quick recap. Yesterday, you guys learned in 30 minutes what the stock market is, the difference between options and equity, how to identify, right, when it comes to a strategy, the metrics that you need, right, from a win rate perspective, reward to risk perspective. You learned about the difference between calls and puts and how you can make money whether a price goes up or down. Today, we're going to be talking about strategy. So a massive warning, and a massive disclaimer, okay? We're going to teach you a strategy today. You are not ready to trade after you learn this strategy. You're not, okay? I am teaching you 10 years worth of knowledge in a couple of days, okay? This is an introduction. This is to get you an understanding of what is possible and how we actually make money with this skill set. But you are not ready to go into the market tomorrow and start guns a-blazing trading with real money. You are not, simply put, okay? If you do, that's on you. Please do not trade after this, especially if you do not have any previous experience or have been a part of any type of professional training, okay? So that's the little disclaimer. Now, last thing that we got to get rocking here. we have to go through a lot. Okay, we're going to go through a lot of information today. We're going to go through a lot of details that are going to help you guys tremendously. Please save your questions to the end. If you guys ask questions from now until the end, I'm probably going to ignore them. I will answer the questions at the end, but we've got to get through the content. Also, I am touching on concepts, I am teaching it, and then we're moving on. Unfortunately, we do not have time to sit and dissect and answer the questions you have in real time. Again, that's what our mastermind program's for. That's what my mentorship's for. But this, again, we will move through in a quick, digestible manner, just the way we did yesterday, where hopefully you guys can, follow along and learn quickly as we go through it. Is everyone ready? We ready to rock? Ready to go? Let's do it. Let's do it, baby. Parker Strong. I know Parker. What's up, Parker? Glad you're here, man. Okay, let's get after it. So strategy, okay? What we're going to talk about today is what we're looking at here and how we make sense of this. So the very first thing, okay, is we're going to talk about the stock market hours. So the stock market, when trading options or, stock equity or shares, it opens at 7:30 a.m. Mountain Standard Time, and 2 p.m. Mountain Standard Time is when it closes, okay? That is this black area here, right? This black section of the screen. I'm showing my screen. You guys should be able to see it. So right here is when the market opens at 7:30. Right here is where the market closes at 2. What you're looking at in the gray area, this is pre-market price action and after-market price action. We do not trade and cannot trade during those times, okay? That is only if you are buying shares or equity in companies, right? And so we do not trade the pre-market or aftermarket data, but we actually use this information to help us understand which way we believe the stock price is going to go. So that's that, okay? Now, most of you, when you think about a stock chart, you are used to seeing, let me hide a bunch of these. Hold on. We're going to go bada bing, bada boom, bang, bang. Okay. Most of you, when you think about a stock chart, you think this, right? And this is the actual stock price on Google. You can see up here, this is what's called the ticker. Every company has what's called a ticker. It is the unique symbol in which you identify the stock, right? Tesla, you wouldn't type in Tesla, it's TSLA, right? Apple, you wouldn't type in Apple, it's AAPL, okay? Google, same thing, GOOGL, okay? So what most people are used to seeing is stock movement like this, right? Where you see the price go up and down, and you can see overall, Google started out the day where the stock price started out right around $308, dropped down all the way to $306, had a high of $312, and closed right around $310. Okay, what we use as day traders, is what's called candlesticks. Okay, and candlesticks are a way for the stock chart or the stock price to essentially tell us a story, right? And that's how you have to think about the movement, right? Is what we're looking at on the chart right now is, yes, we're seeing which way the stock price is moving. So again, if people are more interested in the stock price is going to increase. If people are selling stock and are not as interested, it's going to decrease. Okay, so we can see right off the bat, price decreased. But let's talk about these candles and what these mean. So we are looking at, there are different charts and different time frames you can look at, okay? So while we are looking at this chart as day traders, we trade on the 5-minute chart. So what that means is that these candlesticks, they appear every 5 minutes. So you can see 7:30, the market opens. This price action is right here. You see it start moving around. 7:35, boom, a new candle appears. Price action starts moving around. 5 minutes later, boom, a new candle appears, okay? So now let's talk about how these candlesticks actually work, okay? How they actually work. So the way that they work is there are 2 pieces of a candlestick, okay? There is the candle body and the candle wick. The candle body is the actual bar, the filled in colored bar, the green or blue, right? And then there's the wick, which is that line that is protruding out of either the top or bottom of the candle, okay? So we have the candle body. This is a great example. Candle body right here, and then the wick, the upper wick and the lower wick. And all this is telling us is where price went during that 5 minutes, okay? So again, if you are wanting to really retain this information, please write it down, since we cannot stop and have you guys ask questions. Again, our mastermind program and other offerings that we have, we dissect and go super, super slow. But today, again, introducing all these concepts. So the way it works is if it's a blue candle body, okay? So this means if the previous candle, okay? So whichever candle you're looking at, if the previous candle was a blue candle body, price when that next 5-minute candle opens is at the bottom of the candle body, okay? So at 7:25, price finished right here, 725 to 730. At 730 on the dot, price was right here. Okay, so the stock price on Google was at $310 and what is that? 42 cents, right? 43 cents, something like that, 45 cents. So then when the stock market opens, price starts right there. Okay, and then we can see that since price dropped below where price was on the previous 5-minute candle, it's showing as a sell candle. Now, most stock charts, you will see green candles for buy, meaning price increased from the last candle, and you'll see red candles if it's a sell candle or price dropped from the previous candle. We do blue. Why do we do blue? There's a lot of psychology behind the color red, right? Think of the movie Inside Out, right? When the red dude in the brain, right? What's red? It's just like rage, anger, you kind of black out. We don't want to be feeling any of that, right? When we're trading. What is blue? What does the color blue emulate? Calm, peace, serenity, right? The ocean, weightlessness, meditation, whatever. So that's why we do blue, because there's a lot of psychology when you're just seeing red all over the chart. It does not induce good feelings, right? We don't want anxiety. We want to be feeling calm. So blue is meaning the candle dropped from the previous candle, and green means it rose from the previous candle. So what this means is that as soon as the market opened, so at 7:30 Mountain Standard Time, price started to drop, okay? It was dropping. We know that price got all the way down from 7:30 to 7:35, dropped all the way down to here. And then we can see price came all the way back up and maybe, bounce around, whatever, but ultimately it closed right here, meaning after the first 5 minutes, so at 7:35, price finished right here. Now, again, because price is lower than where price opened, that's why we are seeing this blue candle. Obviously, a pretty big blue candle, right? And again, we see this wick showing that at one point, sellers did push this down. And in real time, you'll see the colors and the bar updating, right? And so it looks like when price got down to here, it looked like it was just one solid bar, no wick. But then once it came to here and buyers were like, nope, we want to push price up, then that's where that wick is created. Okay, so that's how it works. So then price opens right here, boom. Then we see, right, again, price pushed down all the way to here from 735 to 740. But again, what's interesting about this is while it's dropping, it's going to show as a blue candle. It's going to show as a sell candle, right? Because price is decreasing from where price opened on the previous candle. But what happened is it came all the way down to here. And once again, buyers were like, nope, we don't want price to get down any farther. So buyers pushed it up. And then you can see price actually got above where price opened on the previous candle. And so that's why it shows as green. Because if it's finishing or pushing above where price opened at, then it's green. So then after those 5 minutes here at 7:35, boom, the candle closes right here. Because again, remember, when a candle is a green candle, price closes at the top of the candle body, and when it's a sell candle, price closes at the bottom of the blue candle body. Okay, so then at 7:40, boom, new candle appears, and the price is right here at $308.06. You can see that over here, $308.06. Okay, so then we can see price dip down again. It was showing as a blue candle. Once again, buyers were like, no, we don't want price to go lower. Pushes up, and then we see it starts pushing up. And so that is how price action works throughout the entire day. Okay, and that's how it works. So again, right here, starts here, ends right here. Next candle, starts here, ends here. Okay, next candle, starts here, ends here. Next candle, starts here, ends down here because it's a blue candle. Next candle, starts here, pushes down, and then ultimately ends here. Okay, and so this is how you can track and see how price action moves throughout the day. Hopefully that is a very simple, easy to understand candlestick breakdown. Again, the candlestick body is the actual bar. The wicks show where price was. So you can start to think logically. It's like, okay, well, if we see a lot of times where price pushed down, got held, pushed down, got held, pushed down, got held, what does that maybe mean? Well, maybe it means that buyers are there and they don't want price to go any further. Maybe that could help in a strategy. Maybe not. We'll see, right? But that's how candlesticks work, okay? That is how candlesticks work. Next, we are moving on quickly. Again, we got 30 minutes, so we are flying, okay? In the stock market, there are different candlestick patterns that mean different things, right? This is a perfect example. This candle right here is actually a candlestick that shows that a reversal is going, right? I kind of think of it as like an arrow candle. It's called a hammer candle. But we can see right here We see a long bottom wick, meaning price pushed down. Ultimately, buyers were like, nope, we don't want price to go any lower. And then again, you can see right here, it's almost like pointing up, right? This is kind of how I look at these candles, hammer candles. It's like, hey, we're looking at, now does this mean you see this candle and you enter calls? No, but this is one example, and we use 6 candlestick patterns here at Uncommon Education Trading to identify when price is going to go in a certain direction, right? And they work both ways. So if you saw this candle inverse, meaning we had a candle body and then a large top wick, it would kind of be that pointing arrow down, right? For an inverse hammer candle. So that's just a truth about the stock market, is there are candlestick patterns that help us identify which way a stock may go, okay? Now, moving on to the next element. Let's talk about support and resistance, okay? So as you can see here, there are clear, easily identifiable areas where price rose up to and got rejected, or price dropped down to and bounced off of, okay? So when you think about support and resistance in the stock market, think about the floor, right, of like a 1-bedroom apartment and the ceiling of a 1-bedroom apartment, okay? The ceiling is the resistance and the floor is the support, okay? So we can see price came down to here, bounced up, here, bounced up, okay? Kind of came up, came back down to here, and then bounced up again. So right here, okay, this is a support. And why do we know this is a support level? Well, because we saw not only 1, 2, kind of these 3, 4, 5, 6 attempts to get past this level. And did buyers want it to get past there? No. So we know that is a clear-cut support level. Then again, an obvious one, a resistance. Well, price got up to here, and as soon as it got here, what did it do? It rejected down. So this we know is a resistance level, right? Because when price got up to here, people did not want to get above that, right? So that is how a support and resistance works. Now, what's hard is you may look at the charts and be like, well, this technically is a resistance right here. And this technically is a support right here. And this technically is a resistance right here. And this technically is a support right here, right? So it's like, before you know it, your chart looks like, you know, those memes where it's like the dude with the yarn and it's like trying to figure something out, like the serial killer stuff. That's not what we want. So we teach at Uncommon Education Trading 4 main key levels that we use as support and resistance levels that we base all of our trading off of, okay? And what those key levels are is our previous day high and low and our pre-market high and low. Now, what's cool is that Uncommon Education, when you join our community, we have indicator, like custom indicators where we automatically, you know, you put them into your chart and it automatically plots those levels for you, so you don't have to think about it. But again, the pre-market high is during this pre-market time from here to here. Whatever the high was, that's the pre-market high. The previous day high is where price was the previous day at the highest point, which is all the way up here. You can see very far. So Google has actually tanked quite a bit, and we'll talk about that in just a moment. But you can see this is the previous day high. Then we have our pre-market low, where you can see right before the stock market opened, price dropped down to here. That is the pre-market low. And then we have the previous day low, which is the lowest point that price got to from the previous day. Now, why do we trade these 4 levels, and why are these 4 levels the most important that we use? As day traders, you want to enter when price interacts with a key level, right? The entire concept of how we trade is we either want to know when price gets to a key level, is it going to reject or bounce off of that key level, or is it going to blast through that key level or drop below that key level? That's literally all we're trying to identify. So our main strategies on Uncommon Education is identifying reversals, when price touches key levels and reverses, or when price breaks through key levels and continues on. Pretty simple, right? But that is the essence of what a support and resistance is an area where people rejected, or, you know, the stock price rejected, or an area where the stock price bounced off of, okay? That's how support and resistance works. Now, again, we use these 4 key levels. This is how I trade every day. I only trade off of these 4 key levels. Now, as we continue to talk about today, I'm really excited because the strategy that I'm teaching you today is actually a strategy that I used personally trading today that caught myself a very nice winning trade. So it's kind of serendipitous, fortuitous, manifest destiny, whatever you want to call it, but it worked out beautifully and I'm excited to go over it with you guys, okay? So now we are flying. Hopefully you guys are with me. We are flying through this, okay? What is a trend? Okay, let's hide these again. Let's talk about a trend, okay? A trend is really quite simple. If we're looking at Google from yesterday to today, okay, what you're looking at right here, do you think that price is in a downtrend or in an uptrend from yesterday on Google? What do you guys think? Uptrend or downtrend? From just what you're looking at, you've learned nothing. Downtrend, right? So what is a downtrend? It means that price is dropping down. Okay, so the technical way that we know if a trend is trending down or if a trend is trending up is if a downtrend, okay, meaning when price starts dropping, when it makes a new high point, right? So it drops down to here, we can see, and it makes this new high. Well, this high point right here, okay, this high point right here is lower than the most recent high point, okay, which is also lower than the other most recent high point. And then this is a high point, okay? This is lower than this. This is another high point here and here. And guess what? These high points are lower than the last one. And then this high point is what? Lower. So you can see if you draw a line roughly through all these, circles, we are trending down, okay? The stock price is trending down. So one of the most important aspects of trading that we teach and that you need to understand is that you want to trade with the trend, okay? So the trend is your friend, right? Think about like elementary school, little word association. The trend is your friend. So if we're in a downtrend, do you think we're looking for calls or puts? If we're in a downtrend, do you think we're looking for calls or puts? Yeah, baby, puts. That right there puts you ahead of 90% of the people who will ever put a trade into the stock market, okay? Now let's give you guys an example of an uptrend, okay? Let's look at Apple, okay? So on Apple, okay, we have a low point down here. We then have another low point. This low point's higher. We then have another low point. This low point's higher. Another low point. This low point's higher. Another low point. This low point's higher. So is Apple in an uptrend or a downtrend? For what we're seeing right here, an obvious uptrend. So if we are in an uptrend, should we be looking for calls or puts? Calls, baby. We're wanting to go to the moon. Okay? We are wanting to go to the moon. Again, if you guys ask questions, I did warn you, I will not be answering till the end. We have a lot that we still have to get over in a very short amount of time to do so. Okay? So again, you can zoom out as far back as you want. And yeah, maybe over short term we're in an uptrend, but on a longer time frame, maybe we're in a downtrend. But as day traders, we are looking at the 5-day, 5-minute chart, which means we are looking at the last 5 days worth of data. And for me, when I'm making my trade plays for the day, I'm looking over the last 2 days. So from yesterday to today, are we in an uptrend or are we in a downtrend? Okay, so that's how you identify trends. Okay, really quite simple. The trend is your friend. So when we're in uptrends, we want price to move up, looking for calls. We're in downtrends, we're looking for puts. Okay, now this is the only part of today's class that I wish I could spend more time on, and we're not going to. It's not going to make perfect sense, and that's okay. I'm okay with you guys not having this make perfect sense. Okay, there are indicators that we use called the EMAs. Okay, the EMAs are what is called an exponential moving average, and they are these lines that we see. Okay, this pink line and this purple or this blue line. Sorry, let me hide these real quick so that way it's not as confusing. Okay, bada bing, bada boom. There we go. So what this is we have the 9 EMA and the 21 EMA. Think about these as an average of the last 9 candles on this and an average of the last 21 candles on this of where price, quote unquote, should be. Okay, so a general rule of thumb, if price is below the EMAs, sellers are in control. If price is above the EMAs, buyers are in control, right? As a general consensus, right? Now, if price gets super extended away from the EMAs, okay, and that's where the average is supposed to be, theoretically, where should price come back to? To the EMAs, right? Because again, think about when something is super oversold or super overbought. Recent examples in our lifetime, COVID, right? And things that were crazy. Do you guys remember the toilet paper shortage, how absurd that was? So toilet paper, right? If there was a line and the EMA was here, the price of toilet paper was like up here, right? Like toilet paper price compared to where it should be was like up here, okay? So does that mean that price is always going to stay up there? No, at some point, what is price going to do? It's going to kind of level itself out, right? Because again, the toilet paper shortage did not last very long. It was just a crazy, weird thing. Another one, eggs, right? Remember where there's a shortage of eggs where everyone was freaking out? Same thing, right? Where the cost of eggs like quadrupled overnight. Again, it was extended from its average price over the last, 6 months, last year, whatever. So another question, if we see price extended super far below the EMA, could that be a way to maybe look for an opportunity for price to bounce back to that AMA? Yes. Same thing if price is super far extended above the EMA, even though buyers are in control, it's over it's overhyped, it's overbought, right? And if price is super far below, it's oversold, okay? So that's really all I want you to know about the EMAs right now. Now, again, we go so in depth and in detail in these moving forward in our mastermind program and other elements. But for now, that's really all I want you to know. There's so many different ways it can be used. But for now, that's what I want you to know. That's roughly where the average price is supposed to be. And if price is super far above or below, means it's really overbought or really oversold. And eventually, it's going to what? Come back to those EMAs. These lines, they appear in real time, right? So we can see right here, like this aftermarket, you can see these lines are appearing in real time as this candle is moving, right? And you can see this candle, it'll start, slowly moving. You can see someone just bought a little bit, or, money was bought. Now someone just sold a little bit. So this is how these move in real time. And again, after 5 minutes, new candle appears and the lines, these EMAs will continue that way, okay? So now let's talk about a strategy, okay? And I'm going to give you guys an example of the exact strategy I took, and I promise we'll have a time for Q&A at the end where you guys can fire off whatever questions you have, and I will rapid fire answer them for you guys, okay? We still with me? Hopefully you guys are. And again, if it doesn't make perfect sense, it shouldn't. We're going through months and months of stuff over a very short amount of time, but hopefully it makes sense conceptually, right? You guys are like, okay, I'm starting to, grasp some of these key concepts, okay? So now going back, let's put our key levels, right? The previous day high-low, pre-market high-low on the chart. So now I'm going to teach you one of our best strategies at Uncommon Education Trading for free. The fact that I'm doing this and what you guys are learning right now puts you in the top 1% of people who will ever trade in the stock market. That's the truth, okay? That is the truth. What you're about to learn is a system and a strategy that works, and we're going to go over so many examples of it, and I'm going to show you the exact trade I took today with this, okay? So let's say, and this is exactly what happened, price breaks below key levels, okay? And whenever you have multiple key levels, what's called confluence, multiple key levels, EMAs, and we see price go below all of that, that's even a stronger sign that sellers are in control. So number one, we identify, is Google in an uptrend or a downtrend? Downtrend, right? Should I be looking for calls or puts? For puts, got it. Well, what you see down here along the very bottom of the chart, this is volume, okay? So this, it just shows how much volume is being traded on each 5-minute candle, okay? So you can see, and you can see right up here in the top right here on my screen, first candle, 866,000 in volume. Next candle, 477,000 in volume. Next candle, 453,000 in volume, right? So each candle, as you hover over it, it'll show you how much volume. It does not matter the number, okay? The number of volume is relative to the stock. 800,000 might be super, super low for one stock, right? But on another stock, that might be the highest volume it's ever had. So it truly doesn't matter what I literally never look at the number on the volume here. All I'm looking at is the actual blue bar, right? The blue candle bar. And I'm going to actually, let's see, we're going to put, let's see. Give me 1 second. We're going to go to appearance here. We're going to do volume, overlap, no. So we can see it a little bit better. There we go, okay? So again, volume, you can see the first candle typically has the most volume of the day. Next candle we can see is lower. Next candle we can see is lower volume, right? So each candle of price action also has volume associated with it. So the way that we trade is utilizing price action plus volume to understand who's in control, buyers versus sellers, okay? Now, what's going to put you in the number 1% of the 1% of traders, and I can't believe I'm even sharing this on a free call. It's crazy. But this is the secret, okay? This is the secret to how price action works. This is how you actually learn how to read the stock market. When price is going in a certain direction, okay, and volume is sustained or increasing, okay? So what I mean by that is, let's just look at the numbers up here. So right here, price is rising and volume is also rising, meaning we start here around 247,000. Next candle, it's roughly the same. And then the very next candle, 300,000. So when price is going in a certain direction and volume is increasing, there is strength behind the move. So that means that that is strong buyers. Now, right here, if we see price is rising, same thing, right? We see price rising, but what's the difference? Here, volume is increasing, right? But here, volume is doing what? Price is going up, but volume on these candles is going down. So that shows us that it is actually a weak move, right? So the buying pressure that we're seeing is weak. Okay, so the strategy of the rally-based rally of what we're teaching, and again, I'm going to not emphasize that too much because I don't think you guys understand how important what I just told you is. So we're just going to keep it at that. But if you want to change your life, make money for the rest of your life doing this skill, you can literally just base it off of that, right? Rising price, rising volume, strong move. Rising price, decreasing volume, weak move, okay? Sauce. That is like, it's like, you know, Chick-fil-A sauce, like just like the sauce of sauce. It's so good, okay? So what we look for on the rally-based rally, I'm going to go really, really quick because I've got 3 minutes to wrap this up, and we'll see if we can do it, is number one, we look for a rally, okay? What's a rally? A rally is price going in a certain direction with good volume, okay? So obviously on the first candle, very good volume because we can see volume is 866,000, okay? Same thing right here, okay? We see two examples of it on the same stock, which I'm so excited to go over with you guys, okay? So price right here is, again, a rally candle, which is a big candle body, right? Big green candle body or big sell candle body. And you can know just by how much you trade whether it's big or it's not, okay? And we want good volume. So we can see good volume here. This has 300,000 and all the previous candles were, in the low 200,000s. Here, obviously, big candle. Then what we want to have happen is we want price to start pulling back on lowering volume, right? Because you don't want to just chase the move. What a very rookie trader would do is they see this big blue candle, like, oh, we're going to enter puts because it's going tanking, and guess what? The next 4 candles just boop, 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 boop. And if you're playing any type of risk management strategy, you're going to get stopped out here, right? So the strategy is number one, rally. Identify a rally. What is a rally? A big candle with good volume, okay? Number two is we want a minimum of 2 candles of consolidation. Now, what's a consolidation candle? Consolidation candle means price never drops below the rally candle if we're looking at a sell candle, and price never, goes above the rally candle if it's a green candle, okay? So we want price to be pulling back in the opposing direction of the rally candle. Now, we want consolidation candles. What's a consolidation candle? A consolidation candle is a candle where there's a small body. So you can see every one of these, right? There's small bodies, and more than likely there's going to be wicks on both sides, okay? What do you think it means if we see wicks on both sides? Meaning price went up, sellers were like, nope. But then price went down, and buyers were like, nope. It means indecision, right? It just means that, hey, the market's taking a breather. No one's really in control. But again, all we're looking for is after that big rally candle is we want consolidation candles going back towards that 9 EMA on lowering volume. Then all we do, guys, is we wait for price to touch the EMA, which is right here. And it just so happened on this setup, right? Not only did it touch the EMA, but it also touched a previous support level that is now the resistance, right? So what that means is, again, let's say on the second story of a building, right? And you fall through your floor. Well, now you're on the first floor, and the floor from the second feeling is now what? It's your ceiling, right? So support and resistances can flip if price gets above or below it. So again, price drops down. We then see price pulling back to that EMA on what? The most important part, lowering volume. So I entered puts today right here, which is so funny because I literally top ticked this move. I entered at virtually the perfect place where I entered and almost had zero drawdown, meaning I never was in the negative on the position. It just started working exactly how I wanted it to. And then, right, from a risk management perspective, what do? We take profit when it hits the next key level, okay? And what's the next key level? Where we have a few key levels, right? So the first key level we have is where the 2 candle buys close, right? Kind of low of the day here. So if you enter here, close here, which is exactly what I did, I made a 20% move on my money, right? Price actually dipped down to here. I was chasing down here, right? And price got very close. It almost would have been up about 50%, but ended up, getting stopped out right here for a 20% win. So that means if you entered with $100, this is what's going to blow your guys' mind right now. If you entered with $100 on puts right here with this strategy, right? Rally, the base that forms, as soon as it touches the 9 EMA, we enter puts, and then you look for the next rally, right? Rally, base, rally, get it? If you entered with $100 here, in 5 minutes, you would have made 20 bucks in 5 minutes, okay? So now if you entered with $500, right, on this trade, and again, close it right here, you would have made $100, okay? $100 in just 5 minutes. So that is how the rally-based rally strategy works. Now let me go over 2 quick examples. I'm going to go 2 minutes over, and then we're going to open it up for questions, okay? Let's go right here. So now let's give an example for calls, okay? We get this rally candle, good rally candle, good volume. You got it, okay? We get at least 2 candles of consolidation, right? Which is small candle bodies, not pushing above where this rally candle was. And again, we want small candle bodies with wicks on both sides. Then we wait for price to touch the 9 EMA. Happens right here, it happens right here. It gives you 2 different chances to enter into this trade. And then where are we exiting, right? The next key level. Well, the next key level could have been right here as price touched the previous day low. Right here as it touched the pre-market low. And again, that is where you exit the trade. Now, from a risk management perspective, and this is what's going to make it so cool for you guys, right? We talk about how we want our average win to be bigger than our average loss. So on this trade, okay, when I entered right here, right, I knew if price closes above this area, because again, I'm entering off of a rejection of the 9 EMA, or here I'm entering off of a bounce off of the 9 EMA, right, in the rally-based rise strategy. So as long as price stays below this 9 EMA, I'm good. So again, a rough risk here, and then we also have an ultimate percent stop loss, meaning when we enter the trade, it's like, hey, even if, price hasn't closed above structure yet, or, hasn't, invalidated the trade, well, we're only going to risk 10%. So even if it starts pushing up like mid candle and hits a 10% loss, we're still going to get out of the trade. So this was my risk, and this was my reward on the trade. Is that a good setup? Risk reward? Well, yeah, because guess what? If we duplicate this, right? 1, 2, 3, 4. So this is about a 4-to-1, maybe 3.5-to-1 reward to risk. So that means even if you took 3 trades that were losing, but then on the 4th trade you had a winning trade, you still are making money, right? That's with a 25% win rate. This is why reward to risk is so important. Same thing here. Let's say I enter right here, right? And my stop loss is roughly the same, right? Something like this. And then my reward, let's say, is that pre-market low. This is my potential reward on the trade. This is my potential risk, okay? I just gave you the exact blueprint. I just gave you the exact reward to risk setups. And again, oh, Jerry, this may just happen on one stock. No, let's go to NVIDIA, another just random stock on the day. We have multiple examples of this happening, okay? We see right here, rally candle, okay? Little increase of volume. Price consolidating, right? On lowering volume. Look at the volume. Price is consolidating. We have 2 base candles, right? Low candle or small candle bodies, wicks on both sides. What is volume doing? Lowering, right? So you choose to enter anywhere in this realm as it's very, very close or touching that 9 EMA right here, right? And, let's just say, yeah, you for whatever reason, let's say you don't even get a perfect entry, okay? Let's do this. Let's say you don't get a perfect entry. You don't enter till somewhere like right here. And your stop loss looks something like this. And then your potential reward is the high of day, which is right here, right? The high of day, the next key level. This is your potential risk. This is your potential reward. If you have a 50% win rate and every win looks like this and every loss looks like that, guess what, my friends? You're making enough money where you don't have to be doing whatever you want, whatever you're doing right now on a day-to-day basis. And you can spend more time doing those things that you just put into the chat of hobbies and goals and dreams you wish you had more time to give towards. All right, we went a little long, but I feel like I did a pretty good job because we just went over a massive amount of content. So hopefully you guys enjoyed that. Quick recap. If you have questions, start throwing them in. Number 1, you now know how candlesticks work. You know how a 5-minute chart works. You know how we identify, right, support and resistance levels. You know what a trend looks like and how to identify a trend. You know a strategy that actually can make you money in the stock market. It's insane, right? You now know what the stop loss is. You know what our take profit is. It's a lot. It's crazy. So I have prior commitments tomorrow and Thursday evening, but to confirm, you'll be uploading the recordings. Of course, we will be uploading these recordings later. You betcha. Do you do 0 or 1 DTE with expiration or just weekly? Man, it depends on the trader. We teach weekly expiration contracts, right? So that Friday, when you get good and comfortable, you can trade same-day expiration contracts. They move twice as fast, though. So you have to be really, really dialed with your execution. We don't recommend doing that until you have weeks or even months of consistency proving that your entries are good, okay? What other questions you guys have? And if no questions, tell me what you think. Is it crazy to think that this actually works, that like you can actually identify which way the stock price is going to go with a profitable system and strategy? Isn't it insane? Like, again, for me, even when I go over it in these things, it's just like, how cool is this? Like, this ain't no hobby, folks, right? This ain't no hobby. In the words of Kevin Kisner, one of my favorite golfers, hilarious. This ain't no hobby. All right, I want more time to go fishing. Amen to that. I feel like a genius. You are. I know Liz. She actually is a genius. Do you find pre-market low line is still significant if it is in the middle of a climber drop? Yep. Whatever the pre-market low, whatever the pre-market high, does not matter. Opinion on ICT concepts? Garbage. You want my honest opinion? I'd love to see you do one live. Well, guess what, Dimitri? You get to, baby. On Friday, you get to. We will be implementing this. And guys, guess what? I took this exact trade today. Okay? This is no joke. This is real money, real time. I entered puts right here. I exited right here. I live what we teach. We actually do this with real money. It's not a game. It's not a joke. Okay? So yes, on Friday, we will be live trading. You get to see it live, baby. It's going to be awesome. All right, here we go. Let's see more. I like this a lot better than small caps. Yeah, small caps are ridiculous. There's way too much going on. Secondly, what stocks are index you trade? I trade large blue cap stocks. Apple, Google, Nvidia, Tesla, Meta, SPY, QQQ. Names that you hear in the news and are the biggest companies in the world. Why? Because they're always moving. There's so much liquidity, right? You don't need to worry. I literally trade the same six stocks for the last 6 years. Literally. I just trade the exact same stocks. There's no reason to go outside of it. Definitely need to learn about this in more detail, but the basic idea makes sense. Yes. The cool thing is, Jessica, that's what our mastermind program is for, is we go over this. Again, what you're learning in 2 days. Imagine these 2 days in 30 minutes. We go over it 8 to 10 weeks, an hour a day, right? And that's why we get people who literally become profitable before the mastermind's even over. Does your software tell you what ticker symbols could be potentially good for options on a given day? Steven, we literally trade the same strategies every single day. If you want a little tip of how best to find stocks that are trending, right? So what that means is if you're looking at a stock, okay, and you see this, you just see a whole bunch of sideways action. It's not an uptrend. It's not a downtrend. We don't want to trade this, right? This is what nightmares are made of, right? You want to trade the apples, right? Uptrend. You want to trade the Googles, downtrend. So guess what? 2 stocks I was watching today because of the trend, Apple and Google, right? I'm glad you have recordings. I learned so much in 30 minutes. Love it. Amazing. This is the KISS system, of course. If anyone teaches you anything more complex than this, there's a very good chance they're probably not a professional day trader. Every day trader I know trades a very incredibly simple system. So I'm loving how you're teaching this and really excited to grasp the concept. Thank you. Is everything that comes back to 21 EMA? Yes, the 21 EMA, we have a lot more that we could go into with that for sure. For today and just for your understanding right now, we're basing everything off the 90 EMA. Do the pre-market high-low, previous day high-low, auto-populate and thinkorswim? With our indicators, yes. They don't automatically, but we have custom indicators when you're a part of Uncommon Education. Where can I get yesterday's recording? Parker, you should be receiving an email with all the recordings or text. So yes. Is it better to trade futures or stocks? Depends on you. We trade stock options here. You're going to be learning about futures tomorrow. Leave your job money is the play more trades and wins or larger positions and wins. Number 1, you should never leave your job until you have 6 months minimum of making almost double what you're making right now, right? That's my personal opinion. I think one of the best reasons why a lot of people have success is because they don't give up their job, right? And again, it's different for everyone. Some people, they make $200 a day at their job. Some people, they're making $300,000 a year. So that's a very vague and just like open-ended question. And that's what we go over in the mastermind, is I help each individual based on their goals accomplish and get to where they want to be. Is this the only strategy? No, sir. We have about 5 strategies here at Uncommon Education. I mean, I'm a giving, generous guy, but I'm not going to give you all 5 strategies. Come on now. I just gave you one. Just gave you one for free. Come on now. And use this same strategy in futures? You bet. And tomorrow and Thursday, you're going to be learning from Wilson and Jaden on how these principles are applied into futures and how futures work. It's going to be awesome. Need to play around with thinkorswim to learn how to apply the tools with ease. Any suggestions? Yeah, Armando, our mastermind program. I walk you through in excruciating detail how to operate all of it. It's literally 10 weeks of me showing you exactly how to do what I do as a professional day trader, right? And again, imagine what you've learned in these last 2 days in 30 minutes each. It's insane. Okay, so shout out to the Green X fam. Shout out to the Green X fam. That's a deep cut, the Green X crew. How do you find the stock to watch in the AM? We already went over that. I trade the same 6 stocks every day. Find one that's trending. So the price levels are the top of the wicks. Yep. Very top, very bottom of the high and low. Okay, guys, we went way over. Not way over. We're, about 35 minutes in this. But guys, fantastic day 2. Hopefully you guys enjoyed that. We ripped through that. Guys, this is how it is at Uncommon Education. Just so you all are aware, our upcoming mastermind on April 6th, we're going to talk about this towards the end. If you want to learn this skill set, get on a call, talk to someone from our team. You can even talk to me if you want to. You got to join now because we have people who are very excited joining, and we do limit the spots, right? And I actually have a process, and we do decline some people because I'm at the point in my career where I get to choose who we work with. So if I don't like you or if I don't want to work with you, I'm going to tell you no. That's the truth. Because again, I make money trading. This is what I do. The education piece, it is more of like second nature to what I do, and it's never been the main goal for me. So if you're involved, great. If not, that's okay. If you have questions, if you need more feedback, if you have any questions that you're talking about the mastermind, this, that, whatever, shoot us a DM me on my Instagram page, Jeremy Lieber, or DM us at Uncommon Education Trading. But guys, review today. Go back and watch it. I wish you knew what you just got. Like it truly is like it's the secret to reading the market, right? Price action and volume, key levels, and understanding just that handful of good strategies, and your entire life can change. Okay, entire life can change. So I appreciate you guys being here. Thanks so much. If you guys have additional help or info or questions, if you have more info, thanks guys. I really appreciate it. If you have more feedback or anything else you want, feel free to reach out. Really excited. It's going to be awesome. Friday, we will be live trading in real time with real money, showing you how we do this while it's happening. Tomorrow and Thursday, we're going to be going over futures trading. So it will not be me. It'll be Jaden and it will be Wilson. Unbelievable dudes. They are some of the best day traders I know. And if you guys love options, just wait till you learn about futures. It's insane. You guys are going to really enjoy it. I appreciate you taking time being here. And again, the fact that you're here, the fact that you're voicing your goals and dreams, the things you want out of life, you are one step closer to making it a reality. The best decision I ever made, right, in my life was the decision to take a risk and learning a skill that I had so many people tell me was not possible. Imagine if I had listened to them. Imagine if all these people tell me day trading can't work, it's really hard, I wasn't good at math in school. Imagine if I would have listened to them, right? My entire life would be different. All the things that I have in my life, all the good, all the happiness, the joy, right? I mean, I would still find ways to be happy. Of course, I'm just a happy guy, but my life would look a lot different. So take the risk, take the jump, and you guys are doing that right now. So thanks for being here. You will receive these recordings. We'll see you guys on Wednesday and Thursday, and I will see you guys on Friday for our live trading session where we will be implementing these strategies in real time. Thanks so much. You guys are the best. Appreciate it. Have a great rest of your night, and we will talk to you guys soon and see you guys tomorrow for day 3 of our 5-day challenge. Thanks, guys. Appreciate it.